Hey guys, good afternoon, everybody. Today is Monday, May 8th. It is 3:56 right now. Our scheduled mentoring sessions for 4 p.m. So I'm going to go ahead and set up this room real quick and we'll get started shortly with questions for today. So if you guys have any questions, feel free to put them in the chat. Otherwise, we will take a look and see what we need to cover for today. So I don't really have an agenda for today. So if you guys have any questions, just feel free to put them in the chat and then we'll cover them in chronological order as they come in. So just give me a few moments to finish updating everything here and we should be good to go. All right. Looks good. Let me get this link sent out to everybody in the premium. And then I will send them out to the other channels as well. All right, I'll give a few moments for people to make their way in and we'll get started shortly. All right. All right, I'll give a few moments for people to make their way in, guys. If you guys have any questions, feel free to put them in the chat and then we will get started shortly. So we do have one question here. It's a question about how do I market liquidity? I will cover that. And then after that, I will go on to the next question. So let's give a few moments for people to join. And then we'll get started in a few. So it's got a couple things here to check over. All right, perfect. It looks like people are still making their way in. Hey, Wes, how's it going? All right. All right, guys, good afternoon, everybody. Today's Monday, May 8th. It is 4:01 right now. Looks like people are still making their way in. So if you guys have any questions, feel free to put them in the chat. I just have one question today asking, how do I market liquidity? Other than that, I don't really have much to cover today. So if you guys have any specific questions or any questions in general, feel free to put them in the chat and then we'll cover them as they come in order. So I just have one question for today. Not much of an agenda because we don't really have anything new to cover unless there's anything that you guys want to see covered. Hey CJ, hey Dan, PC, how's it going, guys? Yeah, so my main question is from Gian. He's just asking me if I can mark up or show him how I marked up liquidity. I'll start off by showing that to you guys because that's like pretty much the easiest thing that, I mean, it's not that difficult. So today was Monday the 8th. I'm going to go here to 6:30 a.m. right before market open. And I'll show you guys how I mark up liquidity here. So, all right. I mean, the main thing you need here is really the high-low indicator. That's to identify the structure. So the first thing that I do here is I open up the charts, turn on my high-low indicator. From this point here, I start off on the daily time frame. So I'll go over to the daily time frame. And the areas that I'm marking up here are going to be areas that have not been tested. So I'll pretty much just go from like the earliest high-low, whether it's a higher high or lower low. And then from there, I'll just go ahead and mark up, certain zones or certain levels. So we have one right here that hasn't been tested. This has been tested because price has already passed it. So I'm not going to mark that up. That's not relevant to us. We're only marking up liquidity areas that or high lows that have not been tested. So that area right there, and that area right there. Now on the bottom side, same thing. One right there has been tested. One right there, one right there, one right there, and one right there. So that's pretty much all of the areas right there on the daily. Once you've marked up the daily, you want to move on to the next time frame. You just go like in chronological order. So if you have everything set up here, I basically go to from the daily to the 8-hour. One thing that Gian was asking me too was that, like, if certain time frames are necessary. A lot of times they're not going to be necessary because a lot of these time frames here are going to line up with the other time frame. So like, for example, here, the 8-hour, you can see that we already have zones that are marked up, right? Or not zones, but high lows. These are the same high lows that came up on the daily time frame. So a lot of times it's not super necessary, but obviously you want to have as many high lows marked up as possible for areas of liquidity, just in case, price may come to that area and you might have missed it. So 8-hour, 4-hour, there's no specific time frames, but I like to cover as many as possible. So from the daily down to the 10-minute and then anything in between that you guys prefer. But I do like pretty much the daily, 8-hour, 4-hour, 2-hour, basically half of each time frame. Daily 8-hour, and then half of that 4-hour, half of that 2-hour, half of that 1-hour, half of that 30-minute, half of that 15, and then the 10-minute. That's pretty much all that I mark up. So we have all these areas right here on the 4-hour marked up as well. Next, we will go over to the 2-hour, which is right here. Mark that up right there. This pretty much lines up with this one, so it's the same thing. This one right there, this one's been tested, so we're not going to mark it up. Go down to the 1-hour over here. $30-minute. And I think this is the easiest way, in my opinion, how to market liquidity. I know there's a ton of other ways to market liquidity, but I think this is the easiest way because you have so many zones just ready to, or so many levels to be marked up. You don't really have to do any thinking. You just look at the levels here that have not been tested. So, I mean, it ends up being super simple if you think about it, because you don't really have to look for anything. It's already marked up on your chart. 10-minute right here. So other than that, I think that's about it. All levels marked up here. We'll go down to the 1-minute time frame. So this is pretty much how we mark liquidity. The reasons why we mark up these levels is because these levels are indicating high lows that have not been tested. Typically, if someone's taking a buy or a sell, like for example, if someone's taking a sell right here, where's their stop loss going to be? Right at the swing high, which is right there. It's not tested, so it's pretty much considered a strong area to possibly test at some point in the future, and then vice versa in the other direction. So for example, here we have a liquidity zone down here. If someone was taking a buy, they would place their stop loss at that swing low. So the trade that we took this morning was, I believe, okay, sorry, I think I missed the zone here because we did take one that came down right here. So let me go back to 6:30. Let me just go up the time frames again. I think I missed the zone up here. Let's go back to the 10. There's nothing here on the 10. Let's go on the 15. It's weird. Trying to figure out where that zone was. Because we did take I remember we took the sell this morning. I even marked it up over here. There was a level right there, but I don't really see it right now. 2 hour, 4 hour, 8 hour. Daily. It's weird. Oh, you know what? Because this is the market already opened right here. My bad. So let me go back one candle. That's why. Okay, so that's the reason why we weren't able to identify that, because I went up too close. So pretty much you mark up these zones pre-market. Okay, see, now it's on the 10-minute right here. Makes sense. All right, so that's pretty much how I mark up areas of liquidity, guys. So this is what I do every morning. If you guys missed this, make sure that you get on the live sessions on time. Some of you guys enter kind of late and you guys aren't able to see me identify these zones. But pretty much here, this is how I identify liquidity. And then in order for me to take trades here, I want to trade in the direction of the trend. So I'll turn on the pivots here. Maybe the trend meter, you can see right here, it's obviously bearish, right? Price is below the pivots, trend meter is pushing down. And it's angling down as well. Going over here to the other time frames, it's pretty much bearish across the board, 5-minute and 10-minute. So obviously we'd be looking for a sell here. So that's why I took the sell here when price knocked down and hit this area of liquidity. So when price hit this area of liquidity, this is where I took my sell right there. And it went straight to our profit target. There's actually 2 entries that came up right here. There was 2 different levels. So depending on which one you guys took, if you took both or just one, there was 2 entries right there. I only took one of them. And this is basically the only trade that I took today. I only took one trade. There's no official trade today, but that's the only one I took. So I took this sell right here. I locked in 2,740 on my main FTMO account, locked in 1,840 on my second FTMO, 670 on my MFF number 1, 670 on my MFF number 2, and 670 on my MFF number 3. PC's asking 5-minute. I don't mark up liquidity on the 5-minute PC. I only mark it up to the 10-minute. So as I mentioned before, I only mark up from the daily down to the 10-minute. I don't go anywhere below the 10-minute. I know in the past we marked up lower than that, but there's just too much noise on the lower time frames. There's no point in going that low. You want something that's reliable and something that's going to really point out, where liquidity is really sitting. So I don't really mark up anything below the 10. Lowest would be the 10. So that's pretty much an example of how I drop liquidity and how I take these trades here. So pretty much when these areas of liquidity get knocked out, then they're no longer useful to us. Now we've deleted those. And if price was to come back down here, this would be another area for a liquidity push. I think some people took this trade. We identified this on the live. There's another liquidity push right here for the same thing. And you can see right there another full TP. So there's pretty much 3 different liquidity pushes that came up today. And I think that was about it for the live session time. I don't think price got to any of these areas of liquidity during the duration of the live session. Yeah, this is 8:15 already, so time passed. Let's see if it hit any of these levels throughout New York session. I think price is pretty much ranging the rest of the morning, so there wasn't really too much to take here or even look at. Let's see, let me go on the higher time frames. I'll see if price gets anywhere near these areas of liquidity. So now price just went sideways right here. Next area of liquidity is either up here if price became bullish, or down here if price remained bearish, but price never got down to those points. So it was kind of a good thing that we got off the live session on time, because if we stayed on, we would have gotten caught in these movements here. So, all right. Other than that, let's see. Next question is from Wes. Wes is asking, you mentioned some people had a potential way to spot fake outs with a high level momentum strat. Would you be able to cover that? Yeah, sure. So, I mean, it's not necessarily for the high level momentum. They use it for the high low scalp. I think we talked about this, Wes. Let me pull up our chat. I'll just pull it up on my side so I can just remember what we talked about. But you can use it for different things as well. So yeah, let's see. I'm just going to read your question again so I could, in my response. Yeah, so for the high-low scalp, not necessarily for the high-low momentum, but for the high-low scalp. A lot of people like using the high-low scalp, but you can use it for the high-low momentum as well, or pivot scalp, or I mean, really whatever you want to apply it with. The problem with using this though is that if you start to apply it this way, you're probably going to miss some trades, because when you're applying it this way, you're kind of just waiting for a confirmation. Rather than getting in right away. So let me just show you a couple entries over here. I know there's a couple entries that came up today. They didn't exactly meet the criteria for this because you would have just missed the trade, would have hit TP already. But let me see one if there's one that didn't. So for example, over here, we had a sell signal, price was below the pivots, trend meter is red. This is considered a momentum scalp entry, also a pivot scalp entry. This right here would have been a full TP. So if you would have waited for the correction right here, or for the extra confirmation, you would have just missed the trade completely because it already went straight to full TP. So this one right here, you would have missed it if you would have waited for that confirmation. And then same with this one over here. So let me see if I could find one where there's an actual example of waiting for that confirmation. Like if you're very conservative and you like really don't want to lose a trade and you're just looking for the perfect entry. I mean, obviously there's ways to do it, but these strategies are meant to be taken right away. So like, for example, right here, if you would have just waited, you would have missed 3 decent entries that would have went straight to full TP right there. Let me see if I can find one that I was discussing with you. Yeah, you would have just missed all these trades because all the trades, it just went straight to TP. Let's see if there's one here. Okay, so here's like one example right here. And this is a bit self-explanatory because I pretty much do this anyways. If we see a candle like this, it's just something a lot of people didn't really notice or like realize. So like, for example, here, there's 2 different ways of doing it, Wes. So I'm not sure if you were on the live session today. I actually covered today another way of doing it where you're identifying how the candle closes in the last 30 seconds of the candle. If you're on the 1 minute, basically the second half of the candle, you just want to see how the candle is closing, and that can show you whether the candle is going to play out or not. So there's a couple different ways of doing it. So this is one way of doing it. And you guys have seen me do this before. Typically, if I see a big candle like this, it's not a huge candle, but it's kind of a big candle. This is like one way of identifying it. So if you see a big candle like this, you would just wait for it to pull back like this. See how price pulled back right here because the candle is big. It typically has to pull back a little bit. And then from this point, you'd put the sell stop right here. And if it comes down, you would catch it and then write it down. So this is what Sisuk and like a couple of the other guys have been doing. This one's probably the easiest way to do it because you can wait for the candle to close, wait for the pullback, and then enter. Let me see if there's another example here of another entry like this playing out. Obviously, it'd be another sell signal. I mean, this is getting kind of late in the session, so it's not really, I wouldn't even take trades around this time, but I'm just looking for the examples of what I went over with you. So there's nothing here really. I don't think there were that many good examples for today. Well, let me see if I can find a better one. So like this type of late entry that I'm showing you, this wasn't really meant for the momentum scalps. Nobody really applies this for the momentum scalps. They apply it for the high-low scalps. So I think that's kind of where the confusion was, because when we talked last week too, Wesley, I mentioned that it was for the it was mainly for the high-low scalp. So I can probably find examples for that. Let me see if there's anything here. The only problem with applying it this way is that you're kind of going to go against the requirements, because typically if the candle gets touched or the low gets touched, it gets invalidated. But there's different ways of, I mean, for Sisuk and Maddie, they don't really follow that rule. So it's just really up to preference. But let me go over here to the 8 hour. Okay, so this is, I mean, it's kind of an example here. It's not a great example, but this is kind of what I was alluding to. So like, for example, right here, see how we have a low right here? And you can see how these candles come down and touch it, right? The candles come down and touch it, but they don't actually break past it. Typically, if the candle gets touched like this, or if this low gets touched, it invalidates, right, for the high-low scalp. The thing with like Maddie and Sisuk is like they still want to take the trade even though it keeps bouncing off. So for example, here it just keeps bouncing off this area, right? But they just leave the line there. So you see how price keeps testing it right here? When price finally makes its way back down, or actually it would be right here. So for example, right here, price keeps touching it. This low is already established. Right here, you make your late entry. So when price does come back down at this point, this is where you would make your entry for a sell. So you're just waiting for it to come back down, and you're waiting for it to close below. So right here, it doesn't close below. It pulls back a little bit. And you can see like there's still technically room for entry here where price kind of bounces around. And then you can see that this candle right here finally does break and close, right? This is where it becomes a little tricky because they're kind of changing the strategy a little bit. The main criteria for the strategy, or not the main criteria, but one of the main criteria is step 6, right? Confirm price has not touched the previous swing before the break and close. So for example, right here, this area gets touched a lot of times, but it doesn't actually break and close past it. So what they're doing is they're pretty much ignoring the 6th requirement, which is fine. You know, you can cater the strategies to yourself. I just haven't tested it like this, but other people have been testing it and it's been working for them. So like, if you want to do this and just have the low marked up and you just wait for it to finally break through, like for example, right here, it finally broke through on this candle, because I've seen a lot of people where they kind of get the strategy a little screwed up. And this is why I don't really like to teach it this way. And I'm probably not going to teach it this way because it goes against like the main criteria here, the 6th step, right? Confirming price has not touched the previous swing. But I mean, if you want to call it like a high-low scalp version 2, where you just ignore that and you just kind of apply the strategy the same way, but you wait for it to break past it, you can do it that way. So for example, here price comes down and touches it, pulls back, comes out and touches it, pulls back, and then right here, it finally breaks and closes past it. This is where they would make their entry. And you can see right there, it drops down and hits CP. So it is, I mean, it's the same strategy. It's just that they're ignoring the 6th step. So this is how they would avoid the fake out. That's one way of doing it. Let me see if I can find another example over here where price actually breaks past it, but they still don't enter right away. Okay, so there's, no, this is an actual high-low scalp. This one actually plays out. So basically what you're looking for is you're looking for a high-low scalp not to work. Like you're purposely looking for a high-low scalp here not to work. So let me see if I can find a fake out here. I mean, these are all going to work. Like these work right away. This one works right away. This one, I mean, basically works. Okay, so this is one here where you could avoid the trade. Like, but the problem with this here is that you're not going to be entering the trade as it's supposed to be entered. You're basically just waiting for it to possibly fake out and then make that late entry. So for example, right here, this is more so what we were talking about, Wes. So for example, we have a high-low scalp right here that came up, right? But this is a fake out that you're looking for. So basically, you have the fake out right here, and then price pushes away, right? When price pushes away like this, what you can do here is you can now set a sell stop here to catch it as it comes back down. So now that we have this fake out right here, oh, but this would be irrelevant at this point because price already passed this area, so you would just cancel it. So this is kind of what happens during the live session sometimes, right? Sometimes during the live session, I'll say, okay, I missed a trade. I'm just going to wait for it to come back down. If price doesn't come back down and it goes past this area of stop loss, then I'm just going to cancel the order. So I've pretty much covered this during the live session. It's just that I never really classified it as a different type of strategy. But this is kind of something that like Sisuk and Mike, Maddie and CT, I think, and Kip have been applying Like they've just been ignoring the actual official entries and just waiting for these fake outs. So again, right here, let me see if this is a fake out. So right here is again another opportunity. So let me see if it actually hit TP already, because if it didn't, it would be opportunity for an entry still. Okay, so for example, right here, Wes, this is one where you can actually do what I just showed you. So for example, here, there's a sell bias, you have a high-low over here, high-low scalp. You can see that price over here, pretty much, it's still running. Technically, if you enter right away, it'd still be running. But it's how price pulled out right here. What you can do is you can have your sell stop right here at that high-low, just waiting for it to come back down. And on this next candle right here, price comes down, fills your order, and goes straight to your TP. So this is one way of doing it. This aligns more with what we discussed. So this is one way if you want to enter late, but as you guys can see, it's going to be difficult because you're basically applying a different strategy, and this might mess with your trade psychology. So if you trade it this way, you're going to have to just trade it this way. You can't really trade the other way because you're not going to know when to enter right away or when to wait for this pullback type of entry. So for this right here, I don't know if I'd really recommend this to you guys. Some people do apply it, but I think it's hard to follow if you're not too skilled in identifying these, these types of entries. And then after that, still apply the regular high-low scalp, because this is different from the high-low scalp. I mean, pretty much disregard the step 6. So this right here would have invalidated it, but for certain people, they would still take the trade. So again, right here, price pulls back, pushes back up. And then, I think this trade right here actually would have hit. Let me see. So this trade over here. Actually, okay, so here's another example of the same thing. Well, so like again, right here, this trade doesn't actually hit TP yet. But if you wanted to make a late entry, you could identify these fake outs right here, right? So price comes down right here. It doesn't hit TP yet. So you want to wait for this fake out. Price pulls back a little bit. At this point, now you have your sell stop right there at the low. And then when price comes down, it fills your order. And then it goes straight to a TP right there. So I think this would be a little more difficult. I mean, this would require a little more practice because you have to be like really glued on the screen to identify these types of entries. I think the way that we covered this during the live session today would actually make more sense for you. So like, for example, here, like what I covered over here from Alexander, like for example, see how this candle broke and closed below it? What you want to do is, and it's hard to review it during, past time because this candle is not live and it's not moving. But what I mentioned during the live session is if you see this candle here kind of like pull back a little bit, you probably want to just avoid it and wait for retracement. So like, for example, here, you wait for this candle to retrace a little bit. And then if it comes back down and it comes clean, then that's one that you would take. So what you would do here is you can go down to like the 10-second time frame. And I actually just discussed this with Maddie. So with this right here, for example, see how we have price pulling down, and then you pretty much want to focus on the last 30 seconds of the candle. So right here from the 30-second mark to the end of the candle, you can see how price pushes up and then it pulls back right here. At this point, you probably wouldn't want to take this trade because it doesn't look like a strong 1-minute candle. And what I mean by that is because these candles right here represent the 1-minute candle. If you go to the 1-minute candle, there's a sell signal there, or not a sell signal, but there's an entry for a high-low scalp. But if you go down to the 10-second time frame, this is going to show you what each candle represented. That's why I put a line right here. See where this blue line is? If you go back to the 1 minute, that's where the candle closes. But if you go to the 10-second, you can see that that's where the candle actually starts. So the candle starts right here, goes back and forth, retraces, and then it pulls up way over here. So if you go back to that 1-minute candle, you can see that right here, there's a huge wick. And you probably would have just avoided this trade, avoided it or entered it late. Let me show you one way of or what I just showed Maddie earlier. So like what I talked about with Maddie. So for example, over here, not just Maddie, but like basically the main members in the think tank. But you can see right here, this is a pivot scalp entry right here for a sell. What I would do here and what I just basically went over with Maddie is you can go back. So right here, we have a sell signal. This is a pivot scalp. In order for you to determine whether this is a good entry or not, you could go down to the 10-second time frame. And then what I told them was if this last, like basically the last candle right here, right? If this closes below all of the candles, so for example, this is where the candle started, this green candle. If you get the last 10-second candle and it closes below the previous candle, so this is basically the 824 candle, 824, 10 seconds, 20 seconds, 30 seconds, 40 seconds, 50 seconds. And then this is the new candle right here. If you go back to the 1 minute, this is a pivot scalp entry. If I saw something like that, then I would take this as a short position and I would be comfortable taking the position there. So there's a lot of different variations to identify this. And you can see it goes straight to full TP right there, right? I didn't know that this was going to happen. I just kind of knew because I went through my my analysis that I just covered with you guys. So here's another way of identifying it again. All right, so price was bearish, right? Price is bearish here. It's pretty much bearish all morning. So again, right here, same thing. If you go and mark this up right here, and you go down to the lower time frames, you're basically looking at how this 1 minute candle moved. It's hard for me to show you right here because this is in past time, but if we're on live, you can see where the candle kind of moves down here at the last 30 seconds. But since we're going to be looking at it from this perspective, since this is later on in the session, you can just go back to the 10-minute time frame. You can see where the blue line is right here. So for this one right here, I wouldn't take it because the candles actually did not close below the other candles. So I'll mark the low over here. You can see that this last candle does not close below. So with this one right here, I would either skip it or I'd wait for a retracement and then make entry at a later time. So for example, here, there's a sell entry. You can see how price kind of pulls back a little bit. You can make late entry there. So this is where your entry would actually happen. So right here, you have your sell signals for a pivot scalp. Price pulls back right here. This is back into drawdown. When price pulls back right there, you can set your sell stop right here. And this is where you would make your entry. So as price comes down right here, fills your order, and it goes straight to your profit target right there. So see how that works, Wesley? Like if you want to enter late, you can do this. And this is actually, I mean, it's like an extra step, but you'll be more comfortable with taking the position because price could have gone into drawdown and then you put your sell stop right there, or you can just enter for a discount if you really wanted to, and then drop down into profit. So let me see if I can find one more example here. All right. So we got another, and it works for both ways. The way that I was showing Maddie this is that it works kind of like, you don't really need the trend, but I'm just using this as a confluence for the strategy. So like, for example, right here, this is just a momentum signal. There's no pivot scalp here because price is bearish, but let me just show you another example here. If this one here lines up with what I just showed you. So we put the blue line right there. We go down to the 10-second time frame. You just want to see how the candles close, right? So this right here, again, would not be a good entry because obviously the candle did not close above the high. Right there, or didn't even break it at least. But you can see here, if you go back to the 1 minute, price kind of pulls back or I mean, actually go straight to TP for this right here. But again, there's no entry there. You wouldn't want to really take a trade directly off momentum. I mean, you can if you really wanted to, but I would just use this as a confluence for the strategies, not necessarily as a standalone. So again, right here, let me see if I can find another example right here. The strong sell signal right there. This is going to be a pivot scalp because it's below the pivots. Trend meter is red. It'd be an intraday scalp entry as well. Probably a momentum scalp here too. So with that said, same thing right here. You can go back to the 10-second time frame. And then this is a perfect example. So see where the blue line is right here? This is basically the low of all the candles right here, right? And you can see how this last candle right here breaks and closes past all of it, right? This is below all of the previous candles. So in this situation right here, Wesley, you go down to the 1 minute time frame and you can see that we have a pivot scalp entry here, right? So if I see something like that and everything lines up, I'm like, okay, I can just enter this right away. I don't really have to worry about it because it looks pretty fine to me. You see that line up right there, trade pulls back a little bit, drops down, full TP. So you guys see how that works? It's going to be a lot easier to look at it during live because you guys can kind of, you can gauge it as price is moving along. Like for example, here, this candle kind of closed pretty strong towards the end. But yeah, I mean, this is probably a better way to identify the fake outs, either to identify the fake outs or to identify, you know, whether you want to enter a trade later or just skip it all together. Let me see this one right here, how this one over here plays out. Okay, this is kind of late in the session though. It's like 10 o'clock. Let me check if there was any news around that time because I don't trade around that time typically. I would probably just keep it to the morning, the live session times. I don't think there was news during that time. There was loan officer loan officer survey at 11, but other than that, not really. So let me go back to this candle here. I just want to see if we can analyze it real quick and see if that same analysis that I showed you guys plays out here too. So let's go back over here, go down to the 10-second. Okay, so this is perfect. So look at this right here, Wes. You can see that this candle here did not break and close below the low, right? So I would have skipped this one here. And if you go back to the 1 minute, you go back over here, you let the trade run, and it actually doesn't play out. So it looks like it would have been a loss. But if you could have used that analysis that I just showed you, you could have totally avoided this loss right here, right? Let's see, Wes said, got it. I haven't gotten access to the 10-second chart just now, but I get what you're showing me. Yeah, if you want to get access to the 10-second chart, you just have to go up here, click this button, type in 10, go to the seconds. Or I think it's already on there. It should be on here on top. Because I think it's built in. I don't think it's a custom time frame. It's just built in right there, top versus seconds. So yeah, because I don't think you could add seconds on yours. Or you probably could, I just don't know how. Or I just haven't. All right, so let me see. Yeah, Wes said, yeah, notice the premium off, the wick off the pivots. I'll keep an eye out for those situations. Martha said you have to have premium. Okay, gotcha. Yeah. I mean, the 10-second thing isn't really necessary, guys. I'll be doing it for you guys during the live session, so it's not really a big deal. But watching it during the live, you can kind of just pinpoint how the candles here are moving. So looking at this candle right here, I'm pretty sure it wasn't necessarily that strong. Let me just go back to it again. Yeah, I feel like this candle here probably wasn't that strong, like during the live. And again, it's at 10 o'clock, so I wouldn't even be looking at that candle or looking to take that entry there. Yeah, you can see the candle here dropped a little bit, pulled back a little bit, dropped a little bit, pulled back. So this might have been one to skip, but I mean, we wouldn't really know unless we were like watching it on the live session. So it's hard to show real examples during these, going and rewind because you can't see the movement of the candle throughout the session. Because this right here, wouldn't necessarily tell you how the candle was moving for this whole minute. Because, a lot of stuff can happen within a minute. This candle could have been down, could have been up, could have been flat, like for a whole 30 seconds and then just dropped at the last second. But yeah, I mean, if you wanted to test it, that'd be one way to test it. Let's see now. Wes said I have to buy access to any charts below the 1 minute. Yeah, no, I have the premium account with TradingView, so I have access to pretty much all the tools. So I might have tools that you guys don't have. It's not completely necessary, especially if you guys just stick to the live session, because I'll probably be doing it on the live for you guys. Or if you guys want me to do it during the live, just pop into the chat and then I'll pull up. Because what I've done now is right here for my main chart, I've opened it where actually crap, I screwed this one up. Wait, where did I do that? Okay, I have to change this here. So I think what I'll do here is I'll just have two charts and then I'll probably just have this one set to this 10 seconds. So what we can do here is we can just have two charts open at once. Like if we get a sell entry over here, which is not going to be super necessary, but if we have a sell entry here, I'll just have the 10-second chart open right here so that you guys can see it as it plays out. Since not all you guys have the 10-second chart, I can have a second chart right here with just 10-second. Because we don't really need the 3 time frames anymore, since I have this chart over here with all the time frames. If we're looking for for the overall trend, I can just look over here, so it'll be easier for you guys to see. Maria over here. So Maria she actually just took a screenshot of TradingView. It looks like she has it too. So you just have to like drop click the box right here, guys. I don't think you need premium for seconds charts. I mean, I could be wrong. I have no idea because I've always been on premium, so I don't know exactly what it looks like. But thanks, Maria, for showing that. So Maria over here, she just took a screenshot of this. and she pointed towards this drop down box. So I think, I mean, I don't know which plan Maria is on, but if she can see it, I'm pretty sure all you guys can see it too, for the most part. It's right there. Yeah, so Maria doesn't have premium. She has the seconds chart right here too. So if you guys want it, I mean, you guys can pull it up. You just have to go over here to this time frame chart right here. It's probably closed off like this, so you guys probably don't see it. But if you click on it there, it'll open up to seconds. Because Maria is not on premium, so she has it. Unless you guys are on the free one, then you probably don't have it if you're on the free. But I think you should have it on pro at least. All right, thanks Maria for that. All right, let me just scroll up real quick. Yeah, Maria has she has the pro plan. So Maria just has a pro, it's not even pro plus, and she has the seconds right there. So thanks Maria for sharing that. So if you guys are on any paid plan, I believe you should probably have the seconds chart. But again, it's not necessary. I'll just, I'll keep it on my chart so that you guys can see. It's probably better for me to analyze it anyways, because if you guys analyze it, you might analyze it incorrectly. So probably best to just watch how I do it. And then once you guys see me do it a couple of times, it'll let you I mean, you'll know how to analyze it from there, because you'd probably want to see me do it a couple of times. Let's see. Martha said, oh, that's weird. Yeah. So it looks like for Martha and for CJ, it's requiring that they have a seconds chart, or have the premium. So maybe it's different. I don't know. Yeah, I have no idea, guys. So it looks like it works for Maria. I don't know if Maria just got lucky getting it, but it does not look like it works for certain people. Or maybe it's just because Maria's international. I honestly have no idea. All right, anyways, yeah, either way, guys, I'll try to look at this on the live session. So okay, so Maria has a Pro Plus. I don't know if you guys have Pro Plus. Martha, do you have Pro Plus? Or CJ or Dan? Okay, so Martha does have Pro Plus. Yeah, I'm not sure, guys, why it's not showing up for you guys, but it's okay. I don't think it's a huge deal. I don't think it's a really big deal, because if you guys are watching the charts live, it's actually easier to see the chart, the candle just move around live, or real time versus a 10-minute chart, 10-second chart, because these 10-second charts do move pretty quickly. So I haven't tested it during live market conditions yet, but I guess we can probably play around with it tomorrow. Gotcha. Yeah, that's weird. I don't know why. Maria, she only has a Pro Plus, but it works for her. So it looks like she just got lucky with gaining access to that, but I have no idea what the case is. Yeah, Wes said definitely can't access it, but he'll get the notification to upgrade. But if he wants to use it, no stress, he'll just watch me do it for now. Yeah, just watch me do it for now, guys. If it's useful, then maybe it's worth upgrading. But at the moment, I haven't even done it myself. I've only done it through this back testing, so I can't really say exactly how reliable it is, or if it's even usable, because it might be moving too fast and we might not even be able to use it. But we'll take a look. So let me scroll up real quick. I think Martha had a question up top. So let me scroll up real quick. All right, Martha said, sorry, I'm late. I would like you to explain the pivot scalp strategy that you mentioned in the live session today. I was really confused with that and went on heavy drawdown in my challenge in the beginning. Be careful, because this is a strategy as it's written, and another one is this version. It can get confusing. So which one are you talking about, Martha? Let me check real quick. So I know so I think you were talking about two different strategies, right? Pivot scalp and something else that was confusing. Oh, gotcha, CJ. Okay, good to know. So CJ said that he can see the time frame there, but when he clicks on it, it asks to do the upgrade. Okay, so Martha said she was adding a comment on C6 variation. The pivot scalp question isn't mine. Let me scroll up real quick. I thought that's what your question said. Oh, sorry. Okay, that's from Maria. Sorry, Martha. So let me just answer Maria's question first, Martha, because Maria's question came first, and then we'll go over to your question. Sorry, your name, because both of your names are blue, so it says Martha Johnson and then Maria Victoria. It just looks like you guys have the same name, but it's different. I just see your initials there. Okay, so Maria is asking if I can explain the pivot scalp strategy that I mentioned. Gotcha. Okay, so let me just cover that for Maria real quick. Yeah, no, it's fine, Maria. I just got you guys mixed up because you guys have similar initials. Because Martha's MJ and you're MB, so it looked a little similar. And your questions came right after each other. So, all right, Maria, let's take a look at the pivot scalp strategy. So I think today market was bearish, right? That's why I took the sell for today. If I remember correctly. Yes, so market was bearish today. So looking over here, let's just go back to market open. I mean, there's a couple entries here. Market opened right here at 6:30. And this is the first pivot scalp entry, right? So I'll put up the criteria here for the pivot scalp. 1 minute pivot scalp. Okay, so for the 1 minute pivot scalp, you want to confirm the overall bias. If you guys remember this morning, retail sentiment was bullish, fundamental bias was bearish, and the technical bias this morning was bearish. So you had 2 out of 3. So the overall bias was bearish compared to it being bullish. It was just retail sentiment that was bullish, but everything else was bearish here. Fundamentals and technicals both pointing towards a sell. So 2 outweigh the 1, and you'd have an overall bias for a sell. Second, you want to confirm a valid K2 momentum signal. Right here, we have a valid sell signal. So that's going to be a valid signal for us there. Third, you just want to confirm prices below pivots 3 and 4. So you want to make sure that pivot 3, prices below pivot 3 and 4. So the way that we would do this before is we just used to use 2 pivots. I still have 4 on there, but you can see right here prices below. And we have the sell signal right here. So this means criteria. Step 1's met, overall bias for a sell. Step 2, we had a valid sell signal. Step 3, confirm prices below pivots 3 and 4 for a sell and above for a buy. And then you can enter on the open of the following candle. So for example, right here, you have a pivot scalp entry right there for a sell. If you would enter the trade right there for 100, 300 split, it went straight to TP right there, right? That's the strategy. Pretty simple. Let me show you the criteria that we just looked over, Maria. So I'll go down to the 10-second time frame and just confirm that again. The thing that I just showed you guys. So this is perfect right here, right? Because you can see that this candle right here is below all of these candles since the blue line. So the blue lines right here, these are pretty much all the candles within that 1 minute candle. You can see the last candle right here broken close below it. So you can pretty much identify that momentum here is very strong. So with that said, that's another confluence you can use. And if that's met, you can see right here, if price pushes through, it would have gone straight to full TP. So there goes an example of the pivot scalp on the 1 minute. Let me see if we could find another one more here. I think there was another one that came up. Yeah, it was right here. So again, same thing over here, guys. Confirm overall bias. It was bearish, still bearish here. Valid sell signal. Confirm prices below pivots 3 and 4. Enter on the close of the candle right here. Again, like I mentioned just earlier, Maria, you can go back and do what I just mentioned. If you really wanted to, it's not necessary, but if you wanted to, go down to the 10-second. You can see again right here, this candle breaks and closes below all the candles within the 1 minute candle, right? So you're basically just going on a smaller time frame to confirm the momentum that it's strong. So it confirms right there. You could have entered the trade at this point, straight to full TP. So there goes another pivot scalp. I don't know if that was the last one. I think that was the last one. This candle here was invalid, so no entry there. And that's pretty much here until 8 o'clock. So those are all the entries from today, Maria, for the pivot scalp. This one and this one right here. If there's any other examples that you want to see, just let me know. But these are all the ones that came up today during the live session. Okay, no problem, Maria. All right, Wes, we'll see you back here tomorrow. Yeah, that's crazy. I can't I don't know where Wes is located. I'm assuming you're like in the UK. Yeah, because Wes said it's 1 o'clock over there. Yeah, this is why I try to like schedule the sessions where you guys can attend. So sorry for pushing it back too late, Wes. But in the future, if you want me to hold it earlier, Wes, just let me know, and we'll try to schedule where it works out for you. But yeah, I figured you're in the UK. I remember we had a lot of UK members in the past, but it's kind of difficult for them to be on these mentoring sessions because it's so late. All right, Wes, we'll see you back here tomorrow morning. All right, let me scroll up real quick and let me see the next question. So the next question I believe was from Martha. Let me scroll down real quick. Or I don't know if she had a question or if it was just a yeah. So Martha said, I was really confused with that and went heavy in drawdown on my challenge at the beginning. Be careful, because one thing is the strategy as it is written, and another is this version, which it can get confusing. Yeah, so I agree with Martha 100%. So the way that I was showing Wes earlier, price breaking, closing, and then waiting for pullback, I would probably not do it that way. It does work, but you're going to confuse like one of the strategies with the other, the actual strategy, and it's going to throw you off. So like, coming from Martha here, she learned from her mistakes and she doesn't do that anymore. And she's actually doing a lot better. So that's what I would recommend that you guys, I would probably recommend just looking at how the candle closes versus looking for the fake out. I think the fake out is good, but it's only good if you know how to do it properly. And if you're a new trader, like, it's probably not a good strategy to show Martha in the beginning because she was still kind of new. It's going to be really difficult because you're going to confuse the strategies. So yeah, definitely Martha. All right, let me scroll down real quick and see if there's anything else that I'm missing. Let's see. All right, we have one question over here from Andy. Andy's asking, I noticed some strategies require the momentum signal before the entry candle and others after the entry candle. What's the difference? It just depends on the strategy, Andy. Some strategies require it, like you mentioned, and some don't. Some of the strategies you're basically getting in early. So if you're getting in for a strategy that doesn't require the momentum signal, and I already know which one you're talking about the V1 variations. Those are because those are the reversal patterns. And they you're basically getting early. You're getting in early before the momentum signal. So a lot of these strategies can be used in conjunction with each other. So let me show you an example of like where you can basically use them as a confluence, either as a confluence or you can take them as two different entries. So so like I was saying earlier, there was a pivot scalp entry over here, or there's one right here actually. There's no confluence here, so there's nothing that you could take here. I'm just looking for sells because the bias this morning was pretty much all for sells. So I'm looking for any sells over here that we can possibly see that will use a confluence as the V1 variation, because that's exactly the one that you're referring to. So for example, right here, or let me just show you two different entries here. So I don't think I would have taken this V1 right here, but it is a V1 variation. It just looks like it's bullish right here, but it is a V1 variation because there's double body rejection and the overall bias is bearish. So for example, right here, we have the double body rejection. We have the higher high right there. There's a pending sell signal. That's going to be an entry for a V1 variation. So if you were to take this here as a V1 variation, obviously you can see it hits TP there. The other entry here that would be different from it would be the momentum scalp. But you can see that these kind of play in order. It kind of sets up a storyline for you. So like say, for example, you missed this trade right here, right? And then you see a sell signal over here and you're like, okay, this is a pivot scalp entry. So it's a totally different entry. And this one over here requires that you wait for the actual momentum, right? So this right here is a V1 variation. And I'll just put a little note right there. So this would be a V1 variation entry. And this one over here would be a couple entries. It'd be a pivot scalp entry and a momentum scalp entry. So, I mean, the main difference between the strategies is that they're different strategies. Some of them require that you wait for the momentum. Some of them require that you wait for pending momentum. The reason why you're looking for pending momentum here is because this is a reversal strategy. This is considered a continuation strategy, and this is considered reversal. So like, for example, if it's a reversal strategy, you're looking for that reversal pattern And then you want that momentum to push price into profit, right? For the continuation strategy, you already have the reversal up here. You have this confirmation of a V1, and this right here is just continuing down. So like, here's the pattern that you're kind of seeing right here. You're seeing price push below, retrace, and continue down lower. So they're two different types of strategies, but they're a bit similar because they're all based off momentum. This is just reversal, and this is continuation. So instead of this just like turning around from where it's currently at, this just continues dropping. So you have one entry here. You can use this as a confluence or as a separate entry. And then for right here, this would be the momentum scalp and pivot scalp. And you can see that they both work out pretty well. So, I mean, you can technically take two entries, or you can just use this as a confluence. Some people don't like taking these types of entries because they think it's risky. So, you know, that's why I always tell people, try out all the strategies and see what you like best. Because some people like to be risky and they want to take a V1 variation. For me personally, I like taking V1 variations too. So this is like my favorite type. And then I use this as a confirmation. They're both risky in their own way. So for example, this V1 variation, this is risky because you're kind of going against the trend. See how price is pushing up right here? You're catching that reversal back to the downside, basically a correction back to the downside. The reason why these continuation entries are risky is because if price is overextended and it's pushing down too far, at that point, you're kind of risking it because this can easily just go the other way, right? Because if it's been dropping for too long, it's going to have to retrace up. It doesn't always retrace up, but a lot of times it does. Let me see if there's another example over here. There's no V1 variation here. There's no V1 variation here. And there's another one right here. So let me just go back over here real quick. All right, so same thing right here, Andy. You can see that there's a double body rejection. So if you wanted to go back over here, it would have been like, okay, double body rejection right there. That's a V1 variation. So I know this is one that you guys like to take a lot. So that'd be a V1 variation. And then if you want to take the next one, or if you say you missed the V1 variation, and then you see the sell signal right here, there you go. The V1 variation would have hit. And you can see how the storyline lines up, right? Typically a V1 variation, and then it's followed by a momentum scalp or pivot scalp. So this one already finished out, full TP. And then here's the second opportunity for entry right here on this momentum scalp or pivot scalp, whatever you want to call it. So again, there goes the next opportunity right here. That trade runs. And another full TP right there. So they're two different strategies. It's just that the ones without momentum are the ones that don't require momentum are usually they're kind of a step ahead. They're a step ahead before momentum comes. And then the ones with momentum, it's already like you already had the confirmation. This is just going to be the secondary confirmation for price to continue dropping. Yeah, so Andy said, okay, so the strategy type will dictate the confluence you use and how you use them. Yeah, for the most part. The thing with the V1 variation is that you don't really have a confluence. So you're kind of getting it, you're getting in at the start of the move. So like, for example, up here, you don't have a confluence before that unless you see a previous V1 variation, right? So for example, here, you don't really have a confluence because it's already at the top, or not at the top, but it's like coming down from that point. There's actually a confluence here. You typically don't get these types of confluences, but you do have a confluence here because sometimes it's at the very top. So for example, right here, you got a V1 variation at this point. So you already know it's starting from here, comes down, retraces, another V1 variation, comes down, retraces, and it actually starts from way up here. So you actually have these over here. You got the V1 variation, V1 variation. So you got two confluences already before it. But if you were like way up here, you wouldn't really have a confluence, right? Because you're already at the very top. So you got no high point from here. You just have this high point, and you have no V1 variations, you know, anywhere up here. So you don't really have a confluence there. But yeah, you can use them as a confluence. Like for example, if you see another V1 variation down here, or you see a sell signal. So here goes again. Right, V1 variation, sell signal, there goes your confluence. You got a sell momentum right there, V1 variation. This is a reversal. So typically the way that the market moves is it goes from, so there's three ways markets can go. Markets can either go up, they can go down, or they can go sideways, right? Three different ways of markets moving. And then on top of that, you can also have, like once you have the direction, so say for example, right here, you already know price is going down, right? So if you already know price is going down, this is typically the pattern that you want to look for price to continue dropping, right? And this is kind of how, like, let me just draw it again, cleaner one. Move this up a little bit. All right, so say for example, you know, price is coming down, right? So when price is coming down like this is like the ideal pattern that you want to see, right? And can you see, can you already see out, Andy, where this here is going to identify entries? So for example, here, and I'm just going to circle certain points here. Like what kind of entries do you think are coming up right here, right? Because I'm pretty sure you can kind of see what I'm looking at right here. And I'll mark them for you too. So it's basically a storyline. Like you're just kind of like playing out the story. So for example, right here, this will typically be a V1 variation entry, right? Because this is identifying the top. It's just like you saw right here. It's typically a V1 variation entry. Right here, typically a pivot scalp or momentum scalp entry. And then right here, this is typically a V1 variation entry. So, I mean, it's pretty simple, right? So like, for example, here, V1 variation, it establishes the top, price comes down, momentum scalp right there, V1 variation, price comes back up. Again, right here, what do you think's up here? Same thing, right? Another V1 variation. So it's pretty much a storyline. Like if you see price going up, down, retrace, etc., that's like how it would play out. Another V1 variation. Again, right here, momentum scalp, and so on. That's pretty much how it plays out. So yeah, you can use this as a confluence, or you can take them as separate entries. I mean, it just depends on your risk appetite, right? If you want to take a bunch of entries, like sometimes you'll see people in the chat and they have like 10 trades, right? Because they pretty much take every entry that comes up. They see a V1, they see a pivot scalp, momentum scalp, they see another V1, pivot scalp, momentum scalp. And I can show you again right here. So for example, V1 variation right there, right? Full TP. And then again right here, so you got a V1 variation right there. And then again right here, you got another momentum scalp, right? 2 entries right there. Both, I mean, eventually they come down, they hit TP, right? So they both come down and they hit their profit target right here. It takes some time, but eventually it hits. Right, all the TPs are hit. Pretty much all those entries got hit to their straight to their TP. Again, right here, another one. V1 variation. That goes straight to TP, and then the one right next to it, another momentum scalp. So it'd be like 4 entries right here. So you could either take like 4 entries, or you can take just one. Like if you don't want to take the V1 variation, you want to wait for the confluence, you wait for the momentum scalp. And then again, right here, same thing. Let's see. Yeah. So Andy said, so whether your entry is considered later or early storyline, you would use momentum to your benefit. Yeah, exactly. Use the V1 variations, double body, double wick, and the momentum to your, basically to your benefit. Because if you say, for example, you get a momentum entry, a momentum signal, and you look back and you're like, okay, there's a storyline reversal pattern, then all right, this is probably going to drop. And that's exactly what happens. So you can use both together. V1 variation, momentum. And you can just keep using them over and over again. So like, you see another V1 variation right here. And it's the same pattern. Like if you were to back test this, Andy, you would see that like this thing comes up a lot. The same pattern. So same thing over and over and over again. And I think there's another one that even came up right here, again, right here, V1. And it's not really too much of a difference, V1, and then again right here, momentum. So these go hand in hand with each other a lot of times. So it's pretty simple. I mean, it's simple, but then it's also complicated. It's easy right now because we're looking back and I'm showing you here. But if you're doing it live, obviously you got a lot of stuff running through your head. So it's not as easy to look at. So yeah, sometimes you can just enter late if you miss the first one and just enter on the second entry. Or, you know, if you're feeling good about a trade, you can just take the V1 right away. And another way to do this too is to identify stuff like this. I mean, there's so many confluences I can show you. Like, for example, there's a high right there, right? So you can see how there's a higher high right there. You see right here, a price comes back and retest it. So say, for example, you miss this V1 variation. It happens, right? Sometimes you miss the V1 variation. Price comes down, comes back up for the retest. You got another V1 variation right there. And that's just another confluence. Like, you know, I can go on and on with these confluences. There's a lot of different confluences that you can use. You just basically use multiple strategies as a confluence. So you would have missed this V1 over here and you're like, okay, came back over here for another retest, double body again. It's another V1 variation. And then you would have taken the second one here. I mean, either one you would have taken, they both would have worked. You could have taken this one right here and it would have worked eventually, but you could have taken this one right here and this one also would have worked. This was pre-market, so it's moving kind of slow, but either one you took, if you took the first one or the previous one right here, they both will worked out either way. Gene Bond's asking, how do you confirm a valid momentum signal? Well, first you need the indicators. That's how you would confirm it. And you'd make sure that it's a red candle within the sell signal. So if you don't have the indicator, it's going to be impossible for you to check it because there's no other indicator out there like it. So you need the indicator, but in order to confirm it's valid, you need a green candle within a buy signal or a red candle within a red signal. So basically you're just color matching red and red, green and green. But I mean, you could try to identify without the momentum signal, but it's pretty much impossible. And trust me, I've tried so many different, before I created this indicator, I tried so many different indicators. I tried so many different things to put this together and I couldn't find anything that worked. So that's why I had to create my own. So a lot of other stuff you can create from scratch. Like you can create your own pivot indicator if you really wanted to. You can create your own high-low indicator if you wanted to. It's not that hard to create a high-low indicator, right? But momentum, this is like a different story. Like this took me years and years to develop. And I finally got it to a point where it works very well in conjunction with the other indicators that I've created. Because back then it was only just one indicator, but since then I've created the high-low indicator, created the pivots indicator, SRV2, SRV1. Everything complements the momentum indicator. You know, it all started with this, and then from there I added other indicators to improve win rate and to create other strategies that work in conjunction with it. Let's see, another question from Andy. Andy's asking, when backtesting, is the daily candle a passable substitute for bias? I personally wouldn't use a daily candle because a daily candle doesn't really tell you too much, right? I mean, it tells you what it did that previous day, but or let me ask you this, Andy. So what do you mean by that? By using it as a substitute for bias? So I'm just kind of curious. Like for example, here, if you have a buy signal, is this what you're talking about? Like if you have a daily for the daily candle, if it's a green candle, if that's going to be the bias for the day, because it completely changes. Like you can see, for example, here, it's bullish right here, but it pulls back right here still. And then, for example, here, price is bearish, bearish, bearish. Price pushes up right here, and then it just continues to, you know, go in the opposite direction. Or sometimes it doesn't. Sometimes it just keeps pushing. Like, for example, here, price is pretty much bullish for like 1, 2, 3, 4, 5, 6 days. And then the next 3 days after that's pretty much bearish. So it comes down pretty heavy from this point. Like 10,000 pips, because it's 1,000 points here. So it drops like 10,000 pips, which is a lot. Gotcha. Okay, let's see. So Andy said, yeah, because it shows whether the market moved up or down. Yeah, I wouldn't use this for bias. I mean, I'd use other confluences, but not necessarily this, because I mean, unless you're trading on like the weekly time frame, like you're trading on the very high time frame, then yeah, you can use this as bias, or you can just turn on the pivots indicator or something, right? Or the trend meter. This will show you what the trend's looking like for the daily. But I wouldn't use the daily to confirm what the bias is on the 1 minute. Because if you're trading on say you're trading on the 1 minute, right? The daily candle is so big that it doesn't really make a difference in the 1 minute. So like for example, today, right? So let me just look at today. Okay, so this is a new day for the 9th. And this is for today on Monday, right? Which is red. So this morning today, our bias was a sell, right? So if you follow this green candle right here because it was green, and you're only looking for buys today, you would have lost like a lot of trades, right? Because the market today for the morning was pretty much all bearish. So for me personally, I would not use that as a bias. I would use multiple time frames. I just wouldn't use the daily. I know what you're thinking about though, Andy, because I thought about that back in the day too. I was like, okay, if the daily push this way, or if I got a sell signal or a buy signal on the daily, it's got to keep pushing, right? I thought the same thing when I first started trading. I'm always looking for shortcuts, but realistically with the market, there's no shortcuts. You really have to understand how to adapt with the market. And that's why it's good that you guys attend the live sessions, because I'm able to help you with that. So for example, like we just looked at the daily, it was bullish, but pretty much all morning here, it was bearish, right? So if you're only looking for buys because of the daily candle, you would have either not had any entries for the entire day, or you would have had like some really bad entries, because like you could have maybe identified this as a reversal, but it didn't really reverse. It came right back down. Came up slightly for retracement, but then it came down super heavy right here. Yeah, no problem, Andy. I mean, that's, it's good that you're asking those questions, because it's better that you ask me rather than you testing it out and then you end up running into some losses. Because I've seen a lot of people where they try to test things out where they could have just asked me, and then they end up taking losses when they could have just easily avoided it. I mean, it's good to test. If you want to test it, feel free. But if you ever have any ideas, I would never test it on a live account. Test it on a demo account, or just ask me directly and I can tell you, because I've pretty much run through all these issues. And I probably would have thought the same things that you would have thought back in the day too, because I've been trading for so long that I get a lot of ideas, and I'm pretty creative when it comes to trading, as you guys can tell. I've come up with stuff, and I've come up with stuff that works, stuff that doesn't work, stuff that kind of works, and everything in between. So let's see. Yeah, exactly. Andy said, thanks, Sean. I think over time, everything will click. Exactly. That's how it is. And that's how you should see it. The thing with trading, guys, is that you'll never really get, like, you'll never finish learning. Like even myself, I've been trading for like over 10 years now, on and off, about like 7 years consistently. And I still feel like I don't know as much in the market. So, I mean, I know scalping. So scalping is like my bread and butter. I know how to scalp, but I'm not the best intraday trader or swing trader, because I can't hold trades for that long. So, if you guys have questions about that, I might not be able to give you guys the best advice, but I do know how to analyze the charts on other time frames as well. It's just a skill that you develop over time, because the way that I analyze the markets works the same way on different time frames. It's just my entry points aren't the best on the higher time frames. And I just don't have the patience to hold on to the trade for so long, especially if it goes into drawdown. It's just, it starts to eat you up inside if you're like in profit, and then on your third day, you're like in massive drawdown. All right, so if there's any other questions, guys, feel free to put them in the chat. Let me scroll up real quick to see if I missed anything. But I think we pretty much covered everyone's questions for today. All right, yeah, I think those are all the questions from today. Let's see. Andy said, I was just hoping it could help with backtesting to see the strategies play out better. I mean, you can test it out, Andy. Like maybe you can find something that I haven't come across, or something that I didn't really test that in depth. If you want to test it, there's no problem with testing something. I would just recommend to not test it on a live account. Like you can back test it, And then like that's one way to learn too, because I think the way that you learn the best is through trial and error. So I think what you can do, Andy, is you can go back to the day, like you can do like what you just said, right? Go to the daily chart. You can go back, like typically what I like to do is I like to start from the beginning of the week. So I'll go over here to like Monday of like last week, not today, but last week. So I'll go over here from the, this is Friday, right? It's a green candle. I'll do that. And then I'll go down to whatever time frame you're trading on. So this is Sunday. Sunday into Monday. Actually, let me go back real quick. I'll make sure I didn't screw that up. Okay, yes, because they skip a day. So you go from Sunday up until Monday over here. And you can see that that daily candle was bullish, right? So if you wanted to use that as a bias, you can go over here to Sunday. And this is what you can do too. So, you know, like you mentioned, here, I'm gonna do this real quick. So I'm gonna mark this up right here on Sunday. And what I'm gonna do here is I'm gonna go like on, say, the 4-hour time frame. And I'm just gonna go forward and see where price goes from so Friday close up until the next day, actually. So Friday up until that Monday, which is like right here. So you can see right here that it actually didn't play out like how you mentioned. It kind of went more sideways, but not necessarily up or down. So I personally don't think it's too useful, but if you want to try it out, Andy, you know, more than welcome. If you see something or you find something that works well, or you find out something that I don't really know about, you know, you can bring it up to me and I can look into it deeper. But for the most part, you can see right here that price is actually very bearish. So on the daily over here, it showed that it was bullish the previous day. And then the next day was actually complete opposite. It's very bearish. Let's see. Maria said, yeah, no problem, Eddie. Maria said, thanks, Sean. Always learn something new. Today I had a light failure during all morning, but I could take a pair of good trades during live electricity. Oh, I see, Maria. Yeah, I know. It seems like your internet connection out there kind of has problems, and then maybe your electricity sometimes, but it's all good. You know, as long as you made profit, I think you did make profit today, right, Maria? Yeah, your profits from today, you locked in, yeah, 355. You took that liquidity with us. So, and if Maria's trading every day with like bad internet and bad electricity and like all these other problems, you guys should be doing well too. Because Maria is like really making it happen, even though, you know, she has all these things that are out of her control. So nice work today, Maria. Let's see, question from Gene Bond. He's asking, what time frame do you execute on? Execute on the 1 minute. That's what I've been doing every day during the live sessions. If you guys ever want to watch my live sessions, I mean, Gene Bond, you've been around for a while, bro. So you should know what time frame I trade on. Yeah, you know, if you ever watch any of my live sessions, guys, just go to the YouTube channel, youtube.com/KodiTaiTrades. Pull up any live session right here. I've been trading on the 1 minute time frame for like the past 7 years now, 7 years now. So it hasn't really changed. For Forex, I do trade on the 4-hour, but I haven't traded Forex for you guys in a long time. I do trade Forex sometimes on my own, but not during the live sessions, of course. Gene Bond's asking, was retail sentiment for a buy today? It was, but that was an overall bias. You can't just go over one thing. You have to have an overall bias. Fundamentals were bearish, retail sentiment was bullish, and technicals were also bearish. So overall bias was bearish today. Let's see, one last question from Martha. She's asking, can you go over the 10-minute move? What are you talking about, Martha? I can go over it, but I'm not sure what you're referring to. 10-minute move. I'm on the 10-minute time frame right here. Question from Martha was the momentum 10-minute scalp you've been mentioning. Yeah, sure, I can cover that real quick. All right, so this is one of the strategies that I used to use a lot, like when I was still working my job. like, I don't know, when was that? Like 5 years ago, or maybe not 5 years ago. I think I was, it was COVID. So we're in 2023. COVID is like 2020. So about 3 years ago, I was still working my normal, I was trading full time, but I was also working full time. So I was still working my attorney job, and I couldn't be on the charts like all day. So what I would do here is let me see if I can find any entries here. I don't think there was anything that came up today during the live session time, but yeah, let me just go back over here real quick. I think there was, yeah, so there was an entry here that I saw last night. That's the one that I was showing you guys on, although I don't recommend applying it at night unless you guys like really know what you're doing, because it's not exactly one that I would apply when the volatility is low. So basically the way that this strategy would work is that I identify the overall bias. We're just going to assume that the bias here is bullish. So for example, right here, we have a bullish bias. We have a buy signal right here. What I look for is a retracement. So I look for price to retrace right here. And then as price retraces, what I do is I set a buy stop right here. I set a buy stop right there and I go for 25.50. So the reason I set the buy stop there is because price is now currently below here. And if price was to push up, it would fill my order and I would let it run to my TP up there. So right here, price is still below. If you get a sell signal, obviously you have to get out of the trade, but right here, we didn't get a sell signal. So I'm still waiting for price to push up. Okay, you can see right here that this candle broke and closed past the entry point. So at this point, I'd be in the position. And then I would just wait for it to push up and run right straight through TP. So price kind of bounces around a bit. And then you can see right here that price eventually goes through and blasts right through my TP, right? So that's how the strategy would work right there. There was another one right here. But again, this is during Asia session. I'm looking at the timestamp. This is like 10 o'clock last night. Another thing right here, same thing. So I'd set a buy stop right there, wait for price to swing back up. Price is coming back up right here. I'll see if it fills on this next candle. Again, it's 25.50 split. All right, it drops down a little lower right there. The candle gets filled. And you can see right there, eventually hits TP. And I only do it once per candle. So I wouldn't take the sell here because the bias is bullish. Here goes another one right here. This is from Friday. You have a buy signal right here, red candle within it. You're looking for the correction back to the upside. You have to make sure that there's an overall bias though. So again, right here, same thing. You'd have a buy stop just waiting right there to fill the order if and when price does get filled. Right here, it doesn't push up yet. Right there, you can see the candle pushes right through. It's now filled. And it blasts right through the TP right there, Martha. So it's super simple. Martha's asking, that's an invalid momentum signal. Yeah, it would still count because the thing with this here is you're just looking for a correction. So like what you're looking for is you're looking for momentum to establish in the direction of the overall trend, overall bias. Bias is bullish. So you do have a red candle here, but you have the momentum. So price is going up. The momentum is just indicating where price is going to go. So it doesn't matter whether it's valid or invalid. As long as you have an overall bias for a buy, then you can still take it there. Let's see if there's another one right here. So this was a Thursday last week. Same thing again right here. Buy signal right there. Price pushes back up. Pretty much waiting for that pending signal here. 25.50 split again. Okay, so right here you can see how price fills the candle, or the candle fills the entry right there. And then at that point, you're now in the position. You let the trade run. This right here didn't play out, but again, if you look at the timestamp here, this is during London session, and this was NFP. So I actually wouldn't have taken the trade here. This is Friday the 5th, NFP. A lot of pre-market movements happen there. So I wouldn't have taken any trades right here. I only know that because it's Friday right here. You can see the timestamp. Friday, London session. And again, as I mentioned, I wouldn't apply this during the outside of the New York session. If you want to apply this outside, then use the asset that falls within that time frame. So if you want to trade Asia, trade like the Nikkei. If you want to trade London, trade the UK 100, like where it's actually moving and it's moving smoothly. You can see right here, you have some crazy candles in both sides because this was NFP. But I mean, that's pretty much how it works, Martha. It's not super difficult. You see there's another one right here. I'll just show you one more example. Buy signal. And another thing with this here too is I can't tell you what the overall bias was because this was like on Thursday of last week or like 2 weeks ago, right? I can't tell you what the bias was because, I mean, I don't know what the bias was at that time. But anyway, same thing right here. You would have your buy stop pretty much pending right there. And then you have another red candle. So you just move it lower. Your buy stop is now pending right there. And then you do the same thing here again. 25-50 split. This is during Asia session. You can see the timestamp. It's at 1800 hours. So this is like, I think like 6 o'clock PM. So like around this time. I wouldn't trade around this time. The spread right now is like 250. It's kind of high. So I wouldn't really trade around this time, but you can see right here, it does get filled eventually. Bounces around for a long time. This is why I wouldn't trade during Asia. You'll be stuck in this position for like hours, for like forever. I mean, eventually it does hit TP, but you know, at this point, you're going to be stressed out. You'll be holding on to this position for about 5 hours, 5 hours until the next day, basically to London. So I wouldn't mess with it. But all right, guys, I think that's it for today. If you guys have any other questions, feel free to put them in the chat. That's just a little hint to the strategy that I was showing you guys. You know, I'll let you know if I'll introduce this as an official strategy. I probably won't because I don't want to overwhelm you guys. I've already kind of showed you guys a lot of stuff. And I'd rather just grow on what we currently have. I'll keep testing this. If it works out really well, then you know maybe I'll introduce it to you guys. But I think at the moment there's too many strategies. I don't want to keep giving you guys new strategies, even though they do work. Like I'm always open to showing you guys new strategies because it helps me help you. So like I'll show you a strategy that works. You guys will test it with me. We'll see if it works for both of us. If it works for both of us, then it's it's a proof of concept, and that's why. That's why it's so useful that we all kind of help each other here. I have the ideas, I have the creativity, I understand the market, I can come up with strategies. It's just testing it, which is what takes most of the time and the energy of establishing it as a official strategy. But I'm always going to find ways to make money in the market. So it doesn't matter, 5 years, 10 years from now, I'm always going to find ways to make money in the market. So you guys have like literally no worries because I make majority of my money from trading. That's literally the thing that I like to do. And I'm always going to find ways. There's always going to be a solution to making money in the market. You just got to figure out how to adapt with the new conditions and, whatever the market throws at you. So, all right, guys, I think that's it for today. If you guys have any questions, feel free to reach out. If not, I will see you guys back here tomorrow for the next live session as we continue on with this